Hey guys, good morning. It's Tony. This is going to be a video kind of based off of the breakout strategy and what I'm going to be looking at this week. If you guys already know, I already have plans to buy Costco this week. Um, I am looking at over the next month or two, so basically for Costco to hit 429, 440 ish, somewhere around that price range. But I am looking at the breakout strategy for Costco, especially since it just broke. It's been oversold on the stochastic and it actually just triggered. Um, I basically sell your shorts on my reverse MACD. So everything looks like it's playing out. It's been on an uptrend ever since March of, the week of March 1st and March 8th or so was the clear double bottom. And then we just kind of went to the upside, right? And I'm basing this off of recent rallies to the upside, which have been pretty consistent on Costco. So it does look like it broke recent all-time relative highs back here at 389, and that actually broke all-time highs back here at 393. So I'm definitely going to be in Costco this week on Tuesday. Another one that I'm actually looking at is AAP. This one can be played a little bit more conservative, depending on how you think the movement is going to be, right? So relative high would be here at 210. You guys can see that we actually closed a little bit above it. I won't be getting into this play maybe until the midweek of what's it called, of this upcoming week on Tuesday, but I will be just kind of gauging and see what happens. But the thing here is there's actually two things that you can do. You can actually set your fibs from relative high, which is that high right there, and the wick right here, this bear candle right here on April 5th. And I'm looking at this at the weekly chart. So again, you can be fairly conservative with this. And if we break to the upside, what you're basically going to be doing is actually taking profit at 229, roughly that level, right? We'd like to do it really depends on the actual ticker, but generally I like to do it. I said before, I said 5% drop, but I actually moved it to around 2.5%, right? So you can either do it at 2.48, 2.6, but I'll do 2.62 just to be a little bit more on the conservative side again. But like I said, it really just depends on the ticker and what the movement actually looks like. If it's continuously on an uptrend, I tend to do a 2.5% profit taking. If I'm not 100% confident about the play, I tend to do a 5% just to be more conservative, right? And I think I've explained how I do my percentages on take profit. So we'll do the 2.5% towards the bottom. We'll do another one on the mid, and then another like relative 2.5% from the highs, right? That's gonna be your third take profit, and it's gonna be the most, and it's gonna be the riskiest. So your first take profit is gonna be 22331, relatively around that area. Second is going to be the actual fib, which is 228, basically $229. And your third take profit for this would be there, right? So this would be actually scenario one. Scenario one is the very conservative, like what is it called? First fib, right? From relative low to relative high. But there's actually a second play that can be done here, which I think might actually net more profit, but you might actually have to buy calls a little bit further out. So scenario one, conservative, would be just kind of waiting at a little bit for maybe the candle to do something like this throughout this week, and we're actually looking for that close, right? But if it's gonna open up right there at like 210 price. Maybe what we're trying to do is have price somewhere around like 215 or so. Generally, you want a candle that kind of sort of looks like that a little bit for the week, right? That way we know it's clearly not going to come back and retest here to like 203 or something, and it's going to shoot up, right? Again, this would be a solid play. And you would, let me see what the actual net would be. I'm just kind of gauging, right? So from open, when I open there, you have a 5% increase to the upside. So on the option side, you might see like a 50% profit on options. Generally, any 10% increase in price on the stock is about 100% increase on the option. So it's a very, very, very rough estimate, but generally that's kind of what happens. From previous run-ups, so you can kind of see that it does, like I said, from forecasts, right? So it does like to have not huge moves to the upside, but again, like look what happened in January 25th of this year. It just had a huge run-up, right? But ever since last year, it's had maybe 1, 2, 3, 4, 5, 6, maybe like a month and a half out of rises, and it just kind of stays consistent like that, right? Until you hit this peak low of January 25th, and then not peak low, but like relative low, and then you have that huge bump to the upside. And I could only guess that this might actually happen again. But how long did this take, right? January to basically May. This took a couple of months out. So if you're looking to actually get into monthly calls for this, maybe a month or 2 month out, this would generally be your play right here. You have to look at the relative history of runs to kind of determine how long this would actually get here, right? So I think another month, maybe a month and a half out calls would actually play out here to 223. But there's a second. There is a second play that you can do this, which would be a little bit longer term, and I'll do that for you guys right now. Oh, damn it, I messed up. So let me remove this. Let me get a little bit. So if you guys have done the strategy already, you guys know exactly what I'm going to be looking at. It's going to be relative highs right here, basically the relative lows at this wick of that January 25th price. What was this low at? Like 140 something. So this would be I would say this would definitely be a longer term play. I wouldn't necessarily say it's riskier. We do have the 50 MA over the 200. We just crossed on the MACD towards the upside. The Stoke is oversold, so you guys know how price loves to move when the Stoke is oversold, right? So what happened here exactly, right? The reverse MACD gave me a buy signal, and the Stoke was creating the perfect buy-in, right? Which is the blue over the red line, basically running to the upside. Right now we do have an oversold position, so we need to kind of follow the same sort of metrics, right? So the last time this happened was here, somewhere around this area, which is July 27th. It ran for like maybe a month or so to the upside. But again, because it just had this recent huge run up to the upside, this kind of might play out again. So I might look at the monthly is still relatively bullish on the upside. I think it could definitely run, right? So if you want to have a longer term play, maybe make a little bit more money, I generally suggest doing something like what I'm about to show you, right? So instead of using relative highs here to relative lows for that breakout strategy, so relative high of 210, relative low of like 179, 180, you'd be more conservative and you would be taking profit like around the 229, 230 area, right? But in AAP's case, you actually have a longer time frame relative high to that relative low of January 25th, which is 142, right? And again, we would do the exact same thing. Forecast, this ticker tends to move a lot. So we would do 2.5%. Like that's perfectly fine. 245.62, we'll set it right there. And then again, just kind of gauge towards the upside, like another 2.5% roughly. We'll leave it there. Remove the forecast and then set your TPs. First TP would be 245, 252, and 258. And this is basically what you're playing. You're playing the length of this, right? So what happened last time that we actually had a huge run up like this? So we went from let's I'm not even going to do relative lows, right? We'll do like around the middle of that week candle. So 155, and we'll do two highs of what, 210 or so, right? So we had a 35% increase, which would kind of net you like around a 3x, like a 300%, a little bit higher than that. But take in mind that this was in 105 days. So if you would want to actually play this play, you might be able to expect a similar move to the upside, but you would have to have at least a 105 day out call. So you would play maybe something like, what's 105 days, 3 months. So like maybe like a 4 month out call on AAP. To write it out to 245, depending on the premiums and how much the calls actually cost. This might actually be a pretty nice play, but again, because the monthly does look bullish, so I would definitely consider doing something like this. But there's more to the downside. So there's a chance, because we're oversold, there is a chance that we could sell off as like, you know, like what happened back in the month of December 3rd of 2018, right? We can definitely sell off. But I think there's a lot of bullish momentum right now on AAP. So I think to be conservative, I think I might actually do the initial play of buying calls for, you know, a month out and basically riding this wave out towards, you know, towards that 229 to like 230 level. I might do that, and I'm going to take into consideration how the candle of this week kind of ends, right? But again, if you do want to play that longer run, you would have to buy at least 4 month out calls and ride the price out to, you know, 245, 252, 258, roughly around this area right here. But I think if I'm doing AAP, I'm going to be a little bit safer, because it seems like it's a little bit more consistent towards these run ups, as opposed to these longer run ups that don't happen as often, but can definitely happen. I just want to be a little bit on the safer side. And like I said, a run up of this amount is, what did I say? It'd be like five. It's like a 5% run, right? So somewhere like right here, whatever. It'd be closer to like a 5% run, and that fib level would be closer to like an 8% run. So this might net you somewhere like, I don't know, 50 to 70% on your options, and it's just a safer play, I think, overall. So, like I said, AAP, great solid stock for the breakout strategy. And I will be looking at this on the more conservative side, as opposed to the longer 4-month out calls that we might get to play this breakout instead of this smaller breakout right here. So I think my take profits would be around this area, like I showed you guys. It would be scenario 2 instead of scenario 1, which would be the longer time frame. And again, AAP and also Costco. I will be doing Costco. I will be buying into Costco sometime on Tuesday. And again, you can do the same scenario with Costco. Right now, I am playing out the Costco move from back here, like in March or so, instead of playing the relative low right here back from, what was it, April 26th, and basically having broken already, and then your take profit is going to be 405 instead of back up there at like 429 or so. So I will be playing the higher run up on Costco just because it actually just broke out towards the upside, and I think it's going to continue going up for a little bit longer. But Costco, definitely still see. Let me actually adjust this because I hate when I have my OCD is going to kick in if it's not like perfectly in there. So Costco, I'm going to be buying, and I'm going to be like a month and a half out calls to ride out to like 430, 440. And then for AAP, I will be looking at it this week. I'm not going to be buying in yet. I just kind of want to see how the movement is towards the actual upside. So I'll see you guys later. I hope you guys enjoyed the video. Definitely use the breakout strategy. I think it's definitely consistent, sustainable. Again, it's not perfect, so if you guys lose, then that's just part of the game. The game of the breakout strategy is just to be consistent and to win more plays that you lose. That's basically it. Be smart about it. It's been tested. I love using the breakout strategy. Use it only on tickers that make sense. Use it only on actual relatable proven stocks, Costco, Microsoft, Neo, PLTR, whatever, right? Don't do penny stocks. Don't do random weird stocks that, have like a super low volume or have a very low market cap. I find those to be super unreliable. Generally stick to higher cap plays for the breakout strategy, and only are the ones that are on a consistent uptrend, right? Costco, consistent uptrend. AAP in a consistent uptrend. Just stick to stocks that are consistently towards the upside, and for the most part, you guys will make money for consistently, right? So I'll see you guys later. Have a great July 4th, and I'll probably be going live sometime maybe later today or tomorrow. Bye.